I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the morning call. Last night we got earnings reports from Alcoa, finally kicking off the second quarter earnings season. The report was decent. We finally got through that, Scott.
It's really funny because you hear so many people make fun of it because for 2 days that's all everyone talks about, kicking off earnings. You know, Alcoa, yes, it's a barometer for what could be going on around the world in a lot of different industries, but overall the stock is just a non-event. You look here at the chart of Alcoa, you will see that, you know, look where it is at the dead lows. It had a little 3-day bounce off this and it's above $8, but really it means nothing. You know, maybe if, you know, people need something to do, it could bounce back up to the 860 area, but ultimately, you know, the more important earnings, you know, will be coming. Look at this chart. This is gross. You know, more important earnings are going to be coming later in the week, starting with, you know, JP Morgan and Wells Fargo on Friday to see the quality of those bank earnings.
Those will definitely be important. What's exciting, though, is this morning we are seeing green arrows around the world. Europe is up, and in Japan we're seeing the Nikkei still continuing off that bounce. I know you've talked about it before.
Well, you know, there's just times to be involved and times not to be. You know, at the beginning of the year, the Nikkei was a story, wound up from November to the highs going up 50%. Yeah. So when it corrected, you know what, it was down 20% off the highs, and that was your area that if you wanted exposure to Japan, you get involved. My 2013 thesis, I talked about how Japan was going to probably do well this year, and it did. And if you missed that, you had another chance, which you always have another chance if you don't, you know, if you don't get scared and you embrace volatility. Because you look here at the chart of the EWJ, look at that topping tail, that outside day. That was finally a clue that Japan had to correct. From there, fast and furious move all the way down to the 200-day, which it held. Okay, this was the day we started talking about it. I think I was on CNBC Asia. From there, you know, you had a bounce. We came back down, wide range bar, PS a slower pivot. We just broke above, holding above the moving averages. So it could continue. I'm not saying we're going to make new highs on the year in the Nikkei, but overall, there is opportunity. If you didn't chase this move up here, you had the opportunity to buy it in the hold, and there's always opportunities if you embrace it and you have a plan.
Now, the S&P also seeing some momentum recently, which you called out on Wednesday of last week. So what does that chart look like, and what's it telling you going into trading today?
Well, the last few days we've had some follow through to the close above the 50-day. Today is going to be a little tricky because, you know, you come in, futures are up another 7 to 9 handles after being up 7 to 9 handles yesterday after reclaiming the 50-day. You know, you look at the chart here of the S&P, you know, there are compelling times to be involved, okay? Here is that May outside day. This is when the trend line broke. Right here around the 100-day when it was reclaimed, that was your area to take a very close look, not get excessively bearish. From there, you had a bounce back into the end of the second quarter, right? Some window dressing. Everyone's saying, oh, it's not going to last, it's not going to last, it's light volume, it's a holiday. You know what? This day on Wednesday, remember that day? That was the day that, you know, you had problems in Portugal, problems in Greece, Egypt was all over TV, and what happened? We opened down 10 handles, closed green, held support, showed commitment, then Friday took back the 50-day. Yesterday, you know, pretty lethargic day, but again, it was up, and now today we're opening, so I do think that we're going to get a little bit of resistance coming into here because my oscillator that was down at, you know, very oversold, minus 70 around here, is now almost plus 50. So at that point, maybe you want to trim some, and then, you know, I would say give it some space, and hopefully, you know, we do get some kind of strategic pullback to, you know, maybe make a new little uptrend, as I do think the highs of the year here are not in.
Highs aren't in. That's good to hear. I like that.
Well, finally, I think Goldman Sachs came out yesterday and reiterated their 1750 call, which was a better timing spot because they came out with that the day before the high in an overheated market. Now we've been in a corrective phase where we're still, you know, 3-4% off the highs. I like that call better than when, you know, the market's just, you know, grinding higher and there's no way to enter it.
Yeah, it makes a lot of sense. Well, in the sector spotlight, let's take a look at oil because that also has moved higher last week. Crude oil shot up above $100 a barrel. Let's take a look at USO because this chart, it's the United States Oil ETF. It closely follows the price of oil. It's been moving up higher, but fundamentally, if you look at oil, it shouldn't continue going up and up and up.
Right,
but what are you looking at in the chart?
Many of my guys aren't trading oil itself.
Yeah.
There was a move, people last week during the holiday like, oh, you know, with the unrest in Egypt and this and that, maybe it's worth a trade. You know, you look at the chart of USO, you will see that, you know, it did have resistance and there was, you know, some type of pattern here when it traded and closed above this pivot right here. Okay, some guys did get long. Now, you know, you have a gap to trade it against. It's actually hanging around considering some things are being considered being, I guess, resolved. Overall, you could trade it versus here. I don't think this is a compelling trade, and I don't think there's that much more upside, to be honest. But I think as long as it continues to hold in there, then maybe some of the opportunities that you're looking at in the actual oil names could present themselves.
Yeah, no, exactly. We're finding value in Ensco is one name that the Action Alerts Plus portfolio owns. These guys are in the deep water drilling market. It's a really good spot. The supply and demand is really good there. They're getting great pricing. And the stock, though, has been under pressure lately. And Stephanie and Jim Cramer, they've been adding to it as the stock goes down to build out their position because they just see the longer term value here.
Well, if you have a longer-term thesis, that's a strategy to use. Typically, I like to buy high and sell higher, but sometimes you buy in the hole, so to speak, and then you add when it starts working out. So if you look at the chart, it looks like it finally found a pivot low on this day. You know, came back up a little bit, held higher, and you have this small downtrend here, okay? Two things that are positive. It grabbed the 200-day back. It's right at resistance. So if you happen to be in a tier 1, I think tier 1 versus 56 makes sense. If it starts getting up above 58 or so, you know, maybe you get a little bit of a move back to 60. But overall, this group is somewhat of a laggard group, so I think you need a lot of time here, and it's going to be a long time before it starts taking out the highs of 2013, where there are a lot of other stocks that have already done that. But if you're looking for something different, I do think that, you know, if they like the fundamental story, who am I to argue with them? Yeah,
maybe it's more longer term play than trade here. But Occidental Petroleum is another stock that the Action Alerts Plus portfolio holds as well. This one's been hovering around its 50-day. Another one that, you know, they're cutting costs, they're improving their production, and interestingly, they have had a management shakeup, new CEOs, an old iBanker, and the key here is, and not that you should buy a stock on this, but there's a potential spin out of the California assets, which we think could get the stock to 115, 120.
Okay, so if there's a few fundamental reasons and then a catalyst, it's worth taking a look. So if you look here at the chart of Oxy, which is something we used to trade when it was in play, it looks a little bit better than the last stock we looked at because it didn't even reach the 200-day. You know, it's hanging in here. You know, it held 88. You know what? If you're trading it just for the spinoff, okay, maybe the better way to do it if you're saying, you know, 115 or 100, 115, you know, perhaps by, you know, September, 95 calls, you know, so this way your risk is premium paid. So if it does not work and this, you know, and it starts to move lower, you know what, you're in the game. If all of a sudden, you know, it gets a spin off and it unlocks the value, you know, boom, it's going to shoot up quickly and you have it. So if you're only playing it for that, I would do some kind of option play, and you know these things always take time. So maybe go out to September, October, November. But overall, as a trader, you know, hanging around there, showing a little bit more relative strength for the group. You know, I definitely think it's worth a look, but it's going to have to get really above 92 to have any hopes of clearing that 95.50 area.
Okay, I like that little call that you put on there. Baker Hughes, it's a stock that has reached a resistance level of $49. What happens if it gets above that? Where can it go? And where's support if it goes down?
Well, this one is, I guess, the quality of the group, and I think some people have been coming out positive on them. Okay. So this is something that, you know, I would say traders would look a little bit towards versus, you know, fundamentally. And if you look here, you will see that, you know, this also, you know, this actually cleared, showed some power. It's trying to clear this resistance. This was a pretty much, you know, like a little bit of a better pivot to get involved in when it cleared this 47. Now this is your next point of reference. Ultimately, I think it's a tiny bit overbought short term. If you look at it here, it's now extended from all your moving averages. So, you know, to enter after, what is this, almost like, looks like 9 days of upside movement, a little tough. If you were able to buy perhaps a pullback to here and it held higher, then maybe, you could hold through for another move. Sometimes they do pull in, sometimes they don't. But overall, here's your resistance. It's positive that it closed on the highs yesterday, but overall, very short term, this seems a little bit overbought, but this is a better acting stock within this group.
Halliburton's also trading better. That stock is now above all its key moving averages. What do you make of this stock? Is there a trade here?
Yeah, this one looks like it's back in play. With oil going up, some attention got here, and at least this one, along with Schlumberger, which I haven't looked at in a while. I haven't looked at any of these names really lately because you had such nice action in Amazon and Google and all these other names we're going to talk about. But everyone looks at different stocks. Everyone has a different type of process, and this one cleared this downtrend right here. So this could have been a nice entry. Now this is that little point of reference right here. Okay, 44, 47. Above that, you have highs. So if you are in portfolio approach and you're looking for fundamentally rock solid names that could start to heat up, in this group I think Halliburton and Baker Hughes is on the move already.
All right, well, we're going to take a quick commercial break and get back into it with some retailers.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
The retail group has shown some real strength this year. On Thursday, we're going to get June retail sales numbers for the group. A handful of the retailers will report. TJ Maxx is one that's going to come out. This is one stock we like. It's a value retailer, off-price retailer. It's done really well as, the economic situation has been a little bit rocky. We expect numbers to be great on Thursday. The weather really got a lot hotter at the end of June, and that's going to help a lot of people. These guys have easier compares coming up, the new e-commerce site, and their inventories are really in line. So we think this one could continue going, even though it's near highs. You know
what? I've talked about this stock a lot with Brittany. She actually likes to shop there. So does my wife. Do you like TJ Maxx?
I like TJ Maxx a lot. Yep.
See, sometimes you got to use the Buffett method. If a lot of people that have good taste like a certain store or company, perhaps the stock acts well, and technically this stock is in the game. It's been on the move. You look at the chart here. This was a nice buy price right here when it cleared this 46 area. Then it readjusted, cleared again, and then after a nice corrective phase, it's right back at the highs. So ultimately, this has been an institutional favorite. I guess a girl favorite, and here is our level. I'd love to see it hang out here a day or two and just absorb this 3-day move, but ultimately, I wouldn't be short this thing, and it does look like above 51.83. It has room, and there'll be nothing to the left.
Gap has been another institutional favorite this year as well. They really got their product right. Their numbers on Thursday should also be very strong. All three divisions, Old Navy, Gap, and Banana Republic, saw strong traffic from what we're hearing in the month, and they've been less promotional. Banana's a little more promotional, but the other two have been a lot better. So
yeah, and this has had a strong comeback. I was where was I? Matatuck, and the outlets out there. Just so you know, if you're in New York and you want to get really nice clothing for cheaper, they have a banana outlet. They have everything, and I looked at their lines and I liked them also, and that was Banana. And besides, I think Selena's been shopping at the Gap. So anyway, with that said, you take again a little bit of common sense in there and look at this chart. This was one nice breakout. Here was another breakout. This is already through an upper pivot. Okay, so look at that. Boom, above this 42-ish, it cleared it. So ultimately, Gap is in the game, and it's showing some momentum, and retail's been strong, and a lot of these names help support the thesis. You'd rather be glass half full on equities versus just looking for the negatives.
I mean, Target's the same story. That stock is trading near highs. It's been moving up steadily. It's, they should benefit from the warmer weather as well, as the apparel portion of their business has higher margins. But then also they have the food portion of the business, which, goes back to the value orientation, one-stop shop.
Yeah,
You know?
and both of these, okay, Target and Walmart, there's been times to buy them, times to just hold them, and times to avoid them.
Right.
Look at the price of Target. Target has been acting much better. You know, if you look at the pullback that the market saw, it came in above the 50-day. Actually, no, this is the 100-day. I'm sorry, but it held the 100-day and just started to clear a trend line with some power yesterday. So that would have been a nice entry here, you know, for today. But ultimately, it does look like, you know, at some point this year, Target will make new highs. Walmart, I remember the day we hit bottom was right here, okay, and I tweeted about it saying, you know what, if you were looking to buy a dip in Walmart, it just held the 200-day, so that was one entry. Here is some commitment in Walmart higher, and then it took out this downtrend closing near the highs. So it shows you, even in these mega, you know, big box stores, whatever the hell they want to call them, you know, there's entries and exits. And overall, this again shows you that there is involvement with equities in this market, and you just got to look for the right spots.
Right. Now, if you want to take a look at the high end, there's Nordstrom. Their quarter disappointed investors. It came in at the low end. They blamed the weather. Again, you know, you don't like to blame the weather, but it should help them this month and this quarter. They've got the anniversary sale, which is their huge sale, which everyone loves. I love shopping that.
There you go.
And that's in this month, in July. So hopefully we'll get a better quarter from them here, but it's still kind of a bit stretched.
Yeah, but you know, you look at the chart, and they don't really show like they missed much. You know, look at that; it's already at highs. It's been a performer all year. This one didn't get to the 100-day. Okay, went through the 50-day, reclaimed it right there, cleared resistance, cleared a bigger pivot resistance here, and now it's at highs. So if it were to come back a little bit, I would say buy it. But ultimately, you know, high-end Nordstrom looks like it's look where it is. Okay, look at this trend. You know, look at this from here. You know, if you're a macro investor, you never really blinked. Right? It's been following this trend for over 2 years now. So anyway, you know, I want to be constructive on equities on a lot of different time frames. So, you know, people just, you know, think that they could be in the equity markets because there's way too many people out there that keep declaring it dead and keep trying to fearmonger everyone out of it.
Yeah, no, I know. It's a shame. It's really
It really
a shame.
is.
Anyway, let's do some quick hits. Let's do Tesla. That's one that you've talked about a bunch on the morning call, and you've been bullish on it.
Yes.
Lately.
You know, and I've been fighting people in the media.
Yep.
Every time there's a little bit of incremental negative out there, everyone bashes it like now it's over, it's an air stock, it's a fluff stock. Elon Musk is no fluff guy, okay?
Yeah.
This guy, he's being compared to the next Steve Jobs. He's innovative, he puts his money where his mouth is. I think this company itself, I've heard about people who have the car, they love it. I think if you drive one of these, test drive it, they have one of the biggest closing ratios. But anyway, the reason why I like it, because I'm not a fundamental guy, is because technically, with a little common sense, it's made a lot of sense to be involved in trying to approach it. And if you look at the chart, you will see, look at this. You know, ever since last earnings, it has not closed below the 21-day moving average for 3 months. There is not many stocks out there that have been riding the 21-day. Here it touched it and then closed strong. Okay, plus, you know, you had a clean breakout. This was when we listed it at 110, listed it again here once it cleared this 114.90, and then it held above it. And even yesterday, when it got a valuation downgrade, you know, it closed green, and now it's opening $4 or $5 higher on being added to the NASDAQ 100. So it's just being added. And you look at this now. I know it's had a big move, but this year is this stock's what, 2 years old? Okay, so that's why you get excited about new issues in an innovative field that could have market penetration. And right now, the electric car business, you know, to me, I don't know that much about it, but I see nothing but, you know, growth and room to the upside, and that's what the market seems like it wants.
Solar City is kind of in the same camp, a lot of short interest there, but yesterday it popped up a nice 7%.
Yeah, and this is in the solar group, another innovative industry. I don't love that industry,
yeah.
But again, I'm not going to take my likes and dislikes in the market, but technically it acted better to absorb this huge lockup that it had to get out of the way, and I talked about the lockup where everyone started getting negative down here if you look at the chart, okay? You know, after it already pulled in from 52 down here, this is when the lockup happened. So the shorts who were thinking it was going to fall apart on the lockup, you know, it already came in. So anyway, talked about this 3650 area. It started to, you know, perk up yesterday. It's already trying to clear this resistance. I think this stock will make new highs in the year. You know, it's got to get above and stay above this 41 area for it to continue. Next real resistance comes in, you know, right around 45, and I think it could see that in the next few sessions. So ultimately, you know, again, I don't want to fight Elon Musk. I think you're better riding his coattails, as you don't find many guys like that out here.
No, exactly. Now, Netflix as a stock is one of the best performing stocks this year. Can it continue? So far, we're halfway through the year. Can it continue that trend?
I think it's acting very well, and it just had a major consolidation phase. Mark started his play of the week, and this was his first play of the week yesterday.
Okay.
You know, you look at the chart here, boom, okay? Held a big gap in a lot of our courses. We talk about the power of pro gaps. This one has had a big one, and it's been consolidating for 3 months. Finally cleared this downtrend. I think we talked about 227 as a buy spot, then this peak here at 235, and it's right around there. So ultimately, I think that, you know, it's going to test this, you know, 240. What is that? 248. You know, either before or after earnings. Ultimately, it's been a great stock for 2013. You know, this gap helped ignite it, and it's been slowly moving up, and I think you stay with it.
Now, Candy Technologies is a smaller company that you've had your eye on, though. It's saw a nice movement recently.
You know what, this one, I missed the big move, like when Tesla was on its way up, people kind of compared this stock as the Tesla of China, which I don't know much about it, but all I know is it did go from, you know, from 4 as high as, what is this, 850. It's worked its way all the way down yesterday. It held the gap here, turned green first. You know, I think there's room to maybe 650 just to at least bounce back. And if, you know, if there actually is some merit to this story, I think there was talk that some, you know, bear in China has now turned somewhat positive on it. It was all over Twitter yesterday. You know, I think this could, you know, from 850 to 5 and change, traded versus 5, and ultimately maybe, you know, you get, you know, a nice move, maybe even fill this gap up at 650.
Okay, that's an interesting one to keep our eye on. Well, those are the levels in the S&P that Scott's looking at, some of the stocks we're watching, and the sectors that we've got our eyes on. So be sure, though, to check in at the end of the day for the daily recap with Scott and the team.
There you go.